All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. Topic for this video is going to be time frame. Okay, intraday time frame specifically. What is the time frame that you plan to trade with? I don't know what the answer is for you. I look at multiple time frames intraday when I'm planning to take a trade. What's most commonly traded, if you're not trading a tick chart, is you're trading either a 1 minute, a 2 minute, a 3 minute, or a 5 minute chart. What you see in front of you is a 5 minute chart. My emphasis to you would be find the time frame that allows you to best identify what the market's doing. Okay, because without understanding market sentiment and what direction the market's heading in, you're going to have a really hard time implementing a trade strategy. So a 1 minute may be way too noisy, okay? A 2 minute may be way too noisy, right? I watch specifically a 5 minute and a 3 minute. And sometimes I drop down to a 1 minute, okay? Just to kind of get that really short-term kind of look to see if there's something that I like. But more often than not, I'm focused on the 3 minute and the 5 minute. We're not going to talk about higher time frame analysis in this video because it's just going to get too in-depth. I'm trying to keep this short. So pick the time frame that helps you identify. Trends move simply higher highs, higher lows, lower highs, lower lows, okay? So you should be able to come in and see if you are able to say, okay, is the market going higher or is the market going lower? Okay, it should be fairly simplistic for you to acknowledge the fact that we have a low, a higher 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 low, and a higher low. You know, along the way, right? We have a high, a higher high, a higher high, a higher high, you know, so on and so forth until we run out of steam, right? Either the buyers run out of, you know, interest in buying, or the sellers become too aggressive, right? It's one or the other. And then the market changes, right? So you have an impulse. In this instance, a very strong impulse. You have a correction, you have an impulse, you have consolidation, you have a slight pullback. So you have a high, slightly lower high. You could call that maybe a slightly lower highs here, right? And then you got a low and a lower low here and a lower low here. Your biggest challenge as a new trader or a trader that's trying to seek profitability is identifying which direction the market's going in and staying with it, okay? If I'm trying to sell every pause in the market, right? Like this looks like a really strong reversal candle. But if I'm trying to sell into strength and the market is rallying or the market is selling off and I'm trying to buy these lows, every new low placed here, I'm trying to buy and I'm trying to buy and I'm trying to buy. It doesn't work, okay? Unless you're at a significant area of support or resistance, that's when that higher time frame analysis comes into play. Then and only then are you going to start to look to try to buy the low or sell the high. More often than not, what I personally do, even taking that higher time frame analysis into consideration, is to start looking for lower highs as my opportunity to short, or my higher lows as my opportunity to buy long. Okay, that's where your lowest risk is going to be. If the market is grinding higher, your lowest risk is going to be trying to buy at support. Now, there's two lines on my chart, and this is by no means what you have to do on yours. But outside of those two lines, I just have volume on the bottom of my chart, and that's it. Okay, that's it. Anything and everything else is hand drawn. Okay, I took them off just to clean the chart, because I hand draw as the market transpires. But when I come to my terminal in the morning, this is what it looks like. Price action, volume, two lines. This is the session VWAP. This is the 4-hour rolling VWAP. By no means is this what you have to use. You can certainly use whatever your heart desires. Me, I have learned over the years that less is more. Now, I also have a reference chart. The reference chart is going to show me all the pivots. It's going to show me moving averages. It's going to show me the MACD. It's going to show me all these different components that I'm going to need to take into consideration as a reference. Okay, it's a reference chart. That's the chart that I share with my clients, their reference charts. Because my hope for them is that the chart that they trade on is as clean as mine is. Why? Because it's the only way they're going to start to be able to understand price action and volume. All right? I don't want to get too deep into volume, but as you can see, I am literally interpreting what? Volume and price action on this chart. These are two volume-driven averages, right? They're VWAP, volume weighted average price. This one is for the session, and this one is a 4-hour setting. You can see it in the bottom left as I touch it. It says 4H. 4 hours is the setting I have it at. Those of you who know me know that the 4-hour chart is my go-to for analysis. That's my chart. That's my time frame. When I do my higher time frame analysis, it's a weekly chart, a daily chart, a 4-hour chart. That's what gives me my levels, right? Where I'm looking for failure or I'm looking for support, okay? So resistance, support, all determined on ultimately the 4-hour chart. But I need to be able to see what's happening. Again, maybe 5 minutes not your time frame. Maybe it's a 3-minute chart, okay? Maybe it's a 2-minute chart. Maybe it's a 1-minute chart. I don't know, okay? But more often than not, it's probably a 1, a 2, a 3, or 5-minute. Okay? I like the 5-minute and the 3-minute. Those are my preferences. My reference chart is a 3-minute. That's where all my pivots are on and all my levels and prior highs and lows and the opens and closes and all that stuff. Okay? And then the 5-minute gives me kind of that bigger picture. Right? Now, when I go to looking at order flow, and that's a whole nother video, but I'm looking at liquidity in the market. I'm looking at the tape, which is called the time, basically the time in sales as they're coming in to the market. I'm looking at the volume profile of the market at the given price that we're trading at. I'm looking at the volume delta at the price we're trading at. Then I'm looking at the footprint chart, which is giving me bids, ask, delta. Okay, so I'm computing a whole lot of things before I make a decision. But I'm not prepared to make a decision until I come here and I understand this component first. If you're trying to dive into any level, any space of that order flow that I just commented on, but you don't understand how to identify market sentiment, meaning which direction is the market going, all that other stuff is just going to confuse the crap out of you. Okay? You're going to be making decisions based on the order flow instead of making decisions based on the market sentiment. You must understand first what the market's doing, when, where, and why via the price action and the volume before you start incorporating those order flow components that I just mentioned, right? So if you're trying to jump a step, you're probably going to still struggle, right? So for me, it always comes back down to, can I understand what the market's doing? And if I can understand what the market's doing, that's the biggest piece of the puzzle where I can now start implementing, okay, I need to look for liquidity. I need to look for absorption. I need to look for delta. I need to monitor the tape. I need to, identify these tiny little nuances, which is where all my drawings come in, right? This is where I would buy. This is where I would buy. This is where I would buy. This is where I would sell. This is where liquidity was lying. This is where I would sell. That's where I would sell. That's where I would sell, right? Like This is an area I would consider getting short. This is an area I would consider getting long. This is an area I would consider getting short. I can now identify all those areas because I understand what the market's doing. The market's making higher lows here. So do I want to sell the market here, or do I want to buy the market here? I want to buy the market here. Right? Do I want to sell the market here? No, I don't. Especially because I have liquidity sitting right up overhead. The market's rallying. Market takes a really strong spot. Do I want to buy here? Yeah, I do. Because that's the market direction. Market takes a big impulse and a correction. Do I want to buy here? Yeah, it takes another impulse. It takes another impulse. Until we ultimately, if I zoom in here, see all these green boxes? This is where the buyers were getting absorbed by the passive sellers. They were eating up their orders. And ultimately, I said to my traders in real time, hey, we're all done here. We're going to fall back to 87 at the 4-hour VWAP. Then we're going to fall back to 86.70 at the fixed VWAP or the session VWAP. And then we're going to fall back into this channel line here at 86.32 and probably retrace lower than that. How did I know that? Well, A, I was able to view what the price action was doing. B, I was able to incorporate the volume and the order flow. Okay, so it took all those components to make those assessments. Now, are you going to be wrong from time to time? Of course you are. You're never going to be correct correct all the time. No trader is. Okay, losses are inevitable, but it's about cutting the loss, being prepared, ready, and willing to go back in for the next setup. But before you get and dive into all that stuff that you're seeing on YouTube and that you're seeing all over the internet, I just encourage you to spend a week or two or however long it takes for you to determine what your time frame is. Is it a 1 minute, a 2 minute, a 3 minute, a 5 minute chart? Watch the market and sit there. Just sit back. You don't have to trade. Just sit back. I got some lows here. Can't seem to go lower. I got a slightly higher low, a slightly higher low. Can you start to see what the market's doing all on its own without any indicators on the chart? Take it all off. Okay? Hide everything. That's it. Whatever time frame that you're interested in trading, and you may want to watch multiple until you find where you're most comfortable, just sit back and relax and watch the chart. Okay? I got a significantly lower high here. What do you think is going to happen? All right? I got a huge impulse. I got a correction. I got an impulse. I made a lower low. This is a significantly lower high, especially below this area. There's a better chance that the market's going to push lower through this low than there is that it's going to rally back up. Now, I know that from watching charts for many, many years. But if you haven't put the screen time in yet, I strongly encourage you to do it. If you're just getting started and you're not able to invest the screen time, TradingView offers this really cool feature called replay. Click replay, go back to the time when you plan to trade. Okay, say you plan to trade at 8 o'clock in the morning, clip it. You can adjust the speed to however you want it. And now sit there after you've had your dinner and you're having your dessert or fruit or whatever you're doing, and just watch the market. Watch the market. Start to understand what the market's doing. Okay, we get so carried away looking for this holy grail that does not exist that you need to sit back and just watch the market. Absorb what price is doing. Absorb how volume is printing. And once you feel like you have a very deep, intimate connection to this component first, then you'll go back and start piecing in all those order flow components, right? But if you don't have a firm understanding of what's happening on the way you're going to have your chart set up, then you're not going to be able to add the other piece into the component of putting the whole picture together very successfully. Okay? I'm trying to save you steps. That's the reason I shoot these videos, so that I can try to save you steps from mistakes that I've made and mistakes that folks that I have trained over the years have made. Okay? There is no greater value than screen time. And that is just simply watching the market. I can tell you from somebody who watches the market for 6 hours a day, 5 days a week, that's 30 hours a week, 120 hours a month, that I can genuinely tell you that every day I learn something new. And you should. And at the end of every day, you should be taking a step back, reflecting on your intake of the market, right? Looking at the market the way you did during that day, going back, reviewing every little nuance of what you believed you were intaking as the market was ticking away, and learn from it. Don't focus on the money. Don't focus on your P&L. Don't even worry about placing the trade at this point. Okay? If you have not reached consistent profitability, I encourage you, the best thing you can do is take a step back and start watching the market in the most raw form, right? Just the price action. Okay? Then when you're ready, add the volume and whatever indicators you plan to run on your chart. I also encourage you, less is more. Okay? The less crap you have on your chart, the more clearly you'll be able to interpret what is happening. What you see right now on my screen is the chart that I trade on. Okay? As it is. Volume, price action, 2 VWAPs. That's it. Okay? I have a reference chart, like I mentioned earlier, the same charts that I share with my traders so that they have all the reference components that I have. This is what I come to at my terminal. Because I've learned over the years that less is more. And I believe that you will learn that as well. Right? If your chart is clustered with stuff, it's going to make it very, very hard for you to see the big picture. And I can promise you the big picture is the most important part in order to helping your journey excel towards that consistency and that discipline and that profitability. So I will do deeper videos on volume. I will do deeper videos on order flow. I will do deeper videos on liquidity and volume profile and the tape and delta and footprint and all that stuff. I will. Okay. But the next several probably training videos are going to be really focused on the bare basics. Right? You have to have this part extraordinarily clear before you get to the next part of adding the higher time frame analysis, adding any of those other order flow type tools. I want to go take a deep dive into volume in itself, because believe it or not, this can tell you a massive, massive story. And it is the most overlooked indicator, and probably the only indicator that will ever give you a leading edge in the market. So those are some other contexts that I do plan to dive into in the next several videos. So guys, I appreciate your time. If you find this video informational, educational, of course, in nature, if you learned something, if you found some value in it, I simply ask that you like the video. If you'd like to leave a comment about any future training videos that you would like me to do, please feel free to do so below. If you have not subscribed to the channel yet, please do, so that you will see these videos as they are posted. I do a recap video every day of the crude market, as it is the market that I am heavily focused on. However, I do translate the NASDAQ, the S&P, and gold futures as well, along with liquidity and order flow. So God bless, guys. Thank you again for viewing this video, and I look forward to seeing you in the next one.